Every advanced chip on Earth is built by spraying metal atoms onto silicon, and that metal comes from a slab called a sputtering target. It's one of the most consumed, least discussed materials in all of chip making, and a great investing question hides inside it. How does a US investor own the picks and shovels of chip materials? There are 3 clean ways, all US listed. Materion, ticker MTRN, the broadest Western target maker. Solstice, ticker SOLS, a brand new spin-off that just left Honeywell. And Applied Materials, ticker AMAT, the company that makes the machines these targets get loaded into. This is the deep dive on a $4 billion material every chip depends on, and the US stocks that actually let you own it. Let's get into it. So what is it? In a vacuum chamber, plasma ions blast a high-purity metal slab, the target, knocking atoms loose. Those atoms drift down and settle as a film just nanometers thick on the wafer. That's physical vapor deposition, the way chips get their metal wiring. Different layers need different metals, copper for the interconnects, tantalum as a barrier so the copper doesn't poison the silicon, titanium, tungsten, cobalt, and now ruthenium at the most advanced nodes. A leading-edge chip has 15 or more metal layers, which means 15 to 25 separate sputtering steps per wafer. Every one of them consumes target material. More chips, more layers, more targets, that's the demand engine underneath this whole trade. Here's why this is an attractive business, not just a commodity. Advanced targets need extreme purity, 5 nines, 6 nines, even 7 nines, meaning 99.99999% pure. At the most advanced nodes, a few parts per million of the wrong element can scrap an entire wafer batch. So chipmakers don't switch target suppliers casually, qualifying a new one takes 12 to 24 months of testing. That requalification clock is a moat, it locks in incumbents and gives them pricing power. For an investor, that's the key insight, this isn't a low-margin metals business, it's a high-purity, high-switching cost materials business with sticky customers. That's what makes the US-listed names worth owning. So how do you own it on a US exchange? 3 ways, each a different risk profile. 1. Materion, the broadest Western pure play in target materials, the direct bet. 2. Solstice, the freshly spun-off US producer with a niche monopoly in one critical metal, the special situation bet. 3. Applied Materials, the equipment giant whose deposition machines these targets feed, the picks and shovels bet, biggest and most liquid. The global volume leader is actually a Japanese firm, but US investors don't buy it directly, you own this trend through these 3 American-listed names. Let's take each one. Start with the cleanest direct play, Materion, ticker MTRN, on the New York Stock Exchange. It has the broadest advanced materials portfolio outside Japan, with $1.7 billion in revenue and an electronic materials segment alone worth $845 million. The story here is focus. Materion recently sold off its low-end architectural glass target business to concentrate on high-purity semiconductor targets, and it just hit the highest profit margins in its history, its first ever 20% adjusted EBITDA margin. That's the moat showing up in the numbers. It also supplies specialty alloys and precious metal targets used in everything from data storage drives to defense electronics, so the demand base is broader than logic chips alone. For an investor who wants a target materials bet without betting on a single chip, Materion is the most direct US-listed way in. Next, the special situation, Solstice Advanced Materials, ticker SOLS. This is the advanced materials arm Honeywell spun off in October 2025 as a standalone company, so it's brand new on the public market, which means it's underfollowed and potentially mispriced. Its hook is a niche near monopoly. Solstice calls itself the only maker of copper-manganese targets at scale, a metal chip makers need below 7 nanometers, and it's spending $200 million to expand its Spokane, Washington facility. As the main US-based volume target producer, Solstice is the clearest domestic supply story in the group, exactly the kind of fresh spin-off that rewards investors who do the work before Wall Street catches up. Now the picks and shovels play, and for many investors the best risk-reward, Applied Materials, ticker AMAT. Applied doesn't make the targets, it makes the deposition machines the targets get loaded into, and it's the dominant player in that equipment. At $28 billion in revenue, it's vastly larger and more liquid than the pure materials names, and it captures the same trend from a stronger position. Every new fab, every extra metal layer, every advanced packaging line needs its tools. You're betting on the whole deposition wave rather than one material. If you're mapping the chip materials chain, subscribe. Photoresist is the next deep dive. Same depth. Now the honest context. The largest target maker by volume is a Japanese firm that supplies roughly 60% of semiconductor targets, but it's not the way a US investor plays this, so we treat it as the backdrop, not the bet. What matters for our three names is the demand engine, AI. Advanced AI chips use more metal layers than ever, and advanced packaging, the stacking and interconnect behind every high-end GPU and high-bandwidth memory stack, multiplies the sputtering steps per wafer. More layers, more passes, more target material and more deposition tools. A single high-bandwidth memory stack, for instance, bonds a dozen or more chips with copper through silicon vias, each one needing barrier and seed sputtering. That's a structural tailwind that lifts Materion, Solstice, and Applied Materials together, regardless of who leads on raw volume. And because targets are consumed and replaced continuously, this is recurring revenue, not a one-time sale. The razor and blades dynamic investors pay up for. Put the investable names on one screen, US listed first. Materion, MTRN, the direct materials play. Solstice, SOLS, the spun-off domestic producer. Applied Materials, AMAT, the equipment king. Entegris and Lam Research as adjacent semiconductor materials and deposition names. Then, for context only, the foreign leaders you mostly can't buy easily, the Japanese materials houses that dominate raw target volume. The pattern is the same one we saw with cobalt. The global volume sits offshore, but the liquid, US-listed ways to own the trend are a focused materials maker, a fresh spin-off, and the equipment giant that sells the picks and shovels. One wildcard worth watching, Ruthenium. As copper wiring shrinks below 3 nanometers, chipmakers are adding a ruthenium liner, and ruthenium is brutally scarce, a byproduct of platinum mining with under 30 tons produced worldwide each year. Its price jumped over 160% in 2025. For our US names, that cuts two ways. Scarce new materials can be a high-margin opportunity for the makers who can supply them, but a ruthenium spike could also bottleneck the advanced nodes their customers are building. It's not a reason to buy or avoid the group, it's a supply variable to track, because it sits right on the frontier these companies are selling into. Now the risks, clear-eyed. First, cyclicality. Target demand follows the chip cycle, and a semiconductor downturn hits the whole group. The materials names feel it fastest. Second, the node transition. The metal of choice keeps changing, from tantalum toward ruthenium and new alloys, so a company tied to the wrong material can lose share even in a strong market. Third, competition. Foreign incumbents dominate the high end, and lower-cost producers keep pushing into mature node and display targets, pressuring margins from below. These are quality businesses, but they're not immune to the brutal cyclicality of chips. Size accordingly. 3 signals to track over the next 12 to 18 months. Signal 1, AI packaging demand. Watch advanced packaging capacity and high-bandwidth memory build-outs, because that's the cleanest read on rising target and tool consumption. Signal 2, the US producer's execution. Solstice hitting its Spokane expansion on schedule and Materion holding its record margins. Those are the company-specific proof points. Signal 3, ruthenium and the node frontier. Watch whether ruthenium prices stay elevated and whether 2-nanometer chips ramp on schedule, because that decides how fast the highest value new materials scale. 3 signals, 3 thresholds, all public. Step back. The sputtering target is the cleanest example of an unglamorous material that every chip depends on, a high-purity, high-switching cost business with real moats and a structural AI tailwind. And the takeaway for a US investor is familiar: you don't chase the offshore volume leader, you own the trend through the names you can actually buy. Materion for the direct materials bet, Solstice for the freshly spun domestic producer, and Applied Materials for the picks and shovels exposure to the whole deposition wave. Upstream, that means high-purity metal refining and scarce metals like ruthenium. Downstream, every fab on the planet. Watch the 3 signals, respect the chip cycle, and play it through the US-listed names, not the headlines. I'm Big Z, follow me, see you in the next deep dive.